Yes, we can see it.
Okay, excellent.
Good.
Really?
Oh.
I'm not. Does anybody have such problems with myself?
Oh, I see it.
Okay.
Yeah, I can see it. I can see it well.
Between the windows.
Okay.
Yes. All right. So thank you very much. I was listening in from the beginning of the panel and made the use of my Russian and Ukrainian that I have. So I'm more or less on board. And I think it will be quite interesting to sort of contrast the experience so far with our very steaming hot market experience and approaching it more from a technology angle than a bank or a financing angle. And to those of you who don't exactly know our model, then we will not be spending too much time on it today, but let's basically just position ourselves. The way we like to put it is that we serve as a platform. So we invite the participants to join our platform. And the general idea is that buyers, suppliers, and banks, they get to run the workflow and the document flow based on our technological and legal framework. So we ultimately serve as a kind of an intermediary. And what is an important distinction is that, let's say, if you take a regular stock exchange or where securities are traded, then usually that intermediary does not touch the financial assets that are being traded. We go a step further, so we actually momentarily buy the claims as well, but with the clear purpose of assigning the receivable loan to the financing bank. And that opens up certain opportunities for all the three parties. It makes the life simpler for the supplier because it's a single onboarding. It makes life simpler for the bank because they don't need to individually onboard every supplier. And it makes life easier for the debtor or the buyer as well, because now the full supply chain, regardless of geographic origin or size or relationships with different banks, can be serviced. So we're not quite unique in that sphere. There are a few other European actors who also have assumed this role. But other than that, I would have to say that the problems we are facing from a legal perspective and technological perspective are very similar. And I would use this opportunity now to explain where we exactly stand. So as of November, we are officially launched. So we financed our first set of invoices, and Molokia, the dairy or milk processor, was the debtor in this arrangement with the milk supplier. And then Agro Prosperous Bank, as a player in the agri space, they were the first creditor to buy invoices. And what is perhaps notable from a technological perspective is that the operation was performed on our platform or in the web interface. So the trade contract or the supply agreement, that was reviewed by hand and exchanged over email, but then the confirmations by the buyer and the supplier were exchanged online. And similarly, we made use of qualified electronic signatures in obtaining these particular confirmations. So the claim approval on part of the debtor and the sale confirmation on part of the supplier. So that took quite a bit of localization in addition to the language and the legal framework. So implementing the electronic signatures was also something we did specifically for the Ukrainian market. And what is also noteworthy is that the first deal was done based on our, what we call this documentless stock flow. So some of you have perhaps seen our agreements as well, but what we enable based on our framework agreement is to finance the claims without touching the underlying documents. So, whether it's the contract or the invoice or the delivery act or note in between. So we rather regulate it in the agreement that it must be a true payable, and in case it's not valid or there is an invalidating event, so the deliveries were not proper, there were quality issues and so forth, then the buyer still has to carry the financial responsibility taken in front of the buyer, and that allows us to avoid the collection of documents, which adds greatly to the efficiency. And it's also somewhat, let's say, whether it's technologically groundbreaking, but at least legally should be groundbreaking in Ukraine. Now, having said that, we are happy to make use of the documents as well, and we know very well that in many instances the debtor wants to be entirely passive in the process, and in these cases the collection of documents is entirely in order. But I believe it's an interesting precedent for the market. And by the same token,
Uwe, would you please reiterate on this documentless doc flow? What are the legal grounds for you to avoid to skip the scans of delivery notes and invoices? Whether this confirmation by the debtor is enough for all the parties without looking at these documents to see that it is okay.
So let's say that in the worst case scenario, there is a case of fraud, like collusion between the accountant in the buyer's financial department and the supplier. And let's say that the document didn't even exist against what is in the framework agreement, which insists that this payable must be correct. Then in this case, the agreement is structured in a way where the debtor would, instead of fulfilling the claim or paying the amount due under the ostensible or pretentious receivable, they would have to pay the same amount. But now, instead of paying this amount because it's originating from a commercial agreement, it effectively becomes a penalty. So then the bank collects it on a different legal basis than the commercial agreement stipulated. So I think that
means
illustrates
that
the
this
instrument.
risk is transferred to the side of the buyer, of the debtor.
Exactly.
Risk of forgery, risk of mistakes, and there is a certain commitment of the buyer to have these risks on their balance sheet. Just this risk is equal to the amount of this purchase.
Pretty much, exactly.
Okay.
And the general idea is that also, this was the worst case I explained. There is a lot of stuff in between where maybe there is a delivery issue, which is much more benign. But the debtor takes an active commitment, explicit, digitally signed commitment that in case there are such issues, we resolve that between the supplier and us bilaterally. So we will not involve the creditor in this dispute. So yeah, there's, it's a fairly lengthy part of the agreement in order to mitigate all these little incidents that could happen. But once you buy into it, then it gives you great efficiencies in the process.
Okay, so the bank is not that involved in resolving this conflict. You are working in addition to platform provider and actually factor of the first hand. Also the so-called mediation, as we have already discussed this in terms of Edward Wild advice, how to resolve the problems, not to go to the court, but use your mediation to resolve the problem.
Yes, and again, if it gets to court, then we have to be ready for that scenario as well. Then we have the paperwork in order, and you can easily present it to the court and legally enforce it. But there should be several steps before that happens.
Okay.
So Anyway, again, I'll reiterate that we are very document friendly, and you will see it right away as well, what the intention is in terms of working with EDIs. I mean, we already, parties can upload documents to the transactions as well. So it's not that, but a fascinating touch, I hope. Then in terms of the technology, so that supports an entirely digital operation, then you know, blockchain has been thrown around now for like 5 and more years, and it has always been a little bit confusing to banks. I think, you know, where's the true value, and I am maybe personally in the school where I see that there are a handful of use cases for blockchain that are economically meaningful, but you know, far below the hype. And one of them is actually a little aspect of the blockchain, a little you know, technology that predates the blockchain hype. It's 30-40 years old, and this idea is called the Merkle tree. And the Merkle tree is essentially this cryptographic method of hashing the entries in the database and making it mathematically verifiable whether certain underlying data has been manipulated or doctored or changed or not. And then the argument goes that actually the data becomes immutable if you timestamp it this way, until they invent some, you know, quantum computing hacking devices. So so that could jeopardize this. But it is state of the art, and not just blockchain enthusiasts would agree on it, but most mathematicians will say that this Merkle tree stuff is neat. So we use that in the form of this guard time timestamping solution, and it's a qualified timestamping solution. So it's just like we have qualified electronic signatures, there is qualified timestamping. So guard time has that status under the EIDAS regulations, and we timestamp all the transactions that way. In an internal banking system, if you have other ways to you know, be assured that everything is correct, you probably don't need to go that far. But because we are working with external financiers, then in fact one of them requested us to implement this solution so that it is in line with the timestamping they use internally as well. So that the bank, SEB Bank in Estonia, they in fact use guard time for their internal timestamping. Then the second aspect is, of course, electronic signatures, and I would invite everybody to kind of think about the electronic signatures more broadly than just the qualified kind. And I know that they provide the most comfort, but it might stop business every now and then because, you know, at the end of the day, an advanced electronic signature is legally binding as well. The trouble is that you need to go through more effort to prove it in court, and it requires your judge to understand what you're trying to convince them of. And these are no small feats, but I think it is healthy to, you know, not how should I say, not make everything qualified electronic signature dependent. Otherwise, it will stop business in many instances. And then in factoring, arguably, this is you know, a pretty important case in terms of the types of collections or confirmations you're collecting. But that needs to be used, and of course in Ukraine the technology is fairly well developed, but there are these security issues. So one of them is the aspect that was mentioned earlier about the lack of legal practice and then, you know, court cases. But the second thing that concerns me is that these keys that you have are in most cases quite easily copyable, and I believe everybody knows how, you know, small business owners give their signature key to the accountant for submitting declarations, and that is not actually a healthy or a very safe practice. So what should happen, and what is already possible, is the solutions where the key is not copyable. So it comes on a flash drive, and that is where the market should go. There are even more fundamental statements I could make about reviewing the architecture of the electronic signatures technology, but that's a separate story. And then another thing that in Ukraine is working fairly well is the KYC and AML checks. So with U-Control, it's possible to automate large amounts of the checks, which again you can do it by hand with their web interface, or then bake it into your banking system and the user interface there, which would automate it even further. And with credit checks, if you do supplier-led factoring, what would be quite interesting are integrations with 1S, and UpSwot is a Ukrainian American Polish startup that you may know of. So UpSwot would allow you to automate a lot of the scoring and the monitoring, which again is extremely important if you want to service small ticket invoices or customers, in order to make sure that the process costs are worth it. Then automation is key, and it would really allow servicing SMEs better if the time to decision is fast, the cost of the decision is low. So I would encourage the use of all such tools. And then,
excuse me, Uwe,
yes.
forgive me my ignorance. I really surprised by this discovery from your speech. I treated U-Control as just another database of enterprises in the internet. You say that U-Control has been upgraded to the legally binding provider of KYC information that we can count on and really use in our documentation?
So that's not quite what I would say, and I will also refrain from making these strong statements, not being an AML officer in Ukraine at all. But overall, as a source of data that informs your decision, it's a valuable tool for automating how this data is retrieved from multiple sources in one go.
Okay, so their API is advanced enough to make our feeding of information more or less momentarily professional and consistent.
Exactly, but the legally binding decisions, as far as I know, must be made internally.
That's our part of risk that we have to take.
Yeah, and
Okay.
same with credit checks, right? So whatever data aggregator you have to retrieve statement data or accounting data or whatever alternative source you do, but as you know, that credit decision is something you can't outsource.
Okay.
Yeah. And then with electronic trade documents, again, the market is moving, I think, very much in the right direction of being able to retrieve such data from Edin and Komar. And I know both players are active in this space of making their treasure trove of data available to creditors. And we are also evaluating integrations with both of them, or rather, there's not much to evaluate. It's more a question of moving in the direction of implementing these integrations. And this is especially important for these more passive debtors. So if you get a countersigned delivery note that at least gives you the information that the goods have been received in this quantity, then that is a big step closer to the transaction. It still probably limits you to doing factoring with recourse to the supplier, but you could begin to entertain doing partial non-recourse. So let's say 50 or 70% of the invoice is bought without recourse to the supplier, if the bank is confident that this amount always is paid, and then the reserve is subject to recourse to the supplier. So this type of innovation, I think, would be very welcomed by the large suppliers, and such data exchange enables it. So these are some of the supporting technologies that we use. And I will perhaps not get into the graph or the diagram of our operations, but feedback from our lawyers. I consulted both with our Ukrainian lawyer and our group lawyer back in Tallinn, who is has this stereo vision, let's say, of both the Estonian market and the Ukrainian market. And overall, the feedback is that in terms of the macro regulation on factoring, overall, I mean, you can finance, right? There is no like big piece of the legislation missing. You can certainly regulate it here and there, make it more transparent who and how gets the license. From the Estonian perspective, I could even argue that who needs a license, because in Estonia or the most European countries, it could be that factoring with recourse requires a license, but just the purchase of claims as such is not a regulated activity. And so that is an interesting contrast between Estonia and Ukraine from our practice. So in other words, we don't need a factoring license in Estonia to be an owner of a claim that somebody else originated. But what is quite complicated is the formation of electronic agreements. So on our platform, when we onboard the supplier, we form an electronic agreement, and that has been, let's say, technically just a lot of work to sort out, because we need to make sure that for such agreements, the supplier is properly notified and sent all these documents, and it effectively makes it takes more effort to develop and also produces a lot of what I call digital trash. So it's documents that probably no one will ever use, even in the court of law. These used, but just by law you have to send a notification of such and such. And I believe that from a regulatory perspective, what would be sensible is to try and view the formation of electronic documents more in line with how stock exchanges or securities platforms work. So, I don't use them often, but when I've bought a few stocks every now and then, I don't get the elaborate notifications on my email that are signed by everybody. I just, buy the stock in my online bank, and I now own that stock, and there's a framework that saves me from all this, let's say, cumbersome documentary load. How to regulate that, this is beyond my remit, but again, it's just overly complicated right now. The second thing is what I already mentioned earlier. So the electronic signatures, the practices are not entirely safe, but we see that the safe practice on having non-copyable keys is available and spreading, albeit more expensive, as I've understood. And the third thing that is, a minor thing, but I think nonetheless, is the stamping requirement. So from what I've gathered in the bylaws of a company, it can be argued or stated that stamping is required by the legal representative at the time of signing a document. With electronic agreements, this is, you can basically replace it with e-stamping, but it seems a little bit redundant and also just more work for the company who is serving as the let's say the borrower or beneficiary of the claim sale. And there is even evidently a conflict that in one law it is stated that stamps are required, or that the counterpart needs to verify whether the stamps are required, and there is another law that conflicts with that, which says that stamping in electronic agreements is not required. So there's just a deficiency in the legislation. So these are some of the, let's say, technologically focused changes that we see would benefit the market. And that's about it.
Thank you, Uwe. Thank you. That's great contribution. I feel that really this is a cherry on cake in our meeting today. Judging by the quantity of